All right. A very good morning, everyone. I hope you guys are doing amazing. I hope you did have an amazing weekend, and I hope we are ready to see what the markets have to offer this week. The very second week of December, the year has pretty much come to an end, and we pretty much want to see what the markets have to offer us as we come to our end of a very, how do I call it, very eventful year. We have had a very eventful year in the markets. Yeah, there's been a lot to unpack, I must say. But before you go any further, and don't forget to create your FXPesa account today with definitely the link in the description and take advantage of that Caribou bonus. Uh, Before I go any further, I would like to remind you guys that whatever is offered here is not financial advice, and kindly do your due diligence before taking any trade decisions. And of course, don't forget to like, subscribe, and share with your peers. You probably have like 20, 30, 40 groups or trading communities. Don't be scared. You can share the link with them and we get started and see what the market has to offer. So back to the markets. This week is going to be a bit over, how would I call it? Pretty eventful. We do have some anticipations, or we do know that we have the Fed decision coming up in a bit. That has kind of put the markets in a bit of a how would I call it, on tenterhooks, right? We did have Jerome Powell coming in about a month earlier and saying that there will most likely be no Fed rate cut coming into December, but that was before we had the government shutdown being uplifted. After it got uplifted, we have had a number of sources telling us that, you know what, we are most likely going to have that 25 basis point. And right now, the investors are being a bit two-sided. They are waiting to see what would actually be Jerome Powell's decision. In terms of the rate cut and how to affect the markets, right? So coming into today is Monday, 8th. Today is Monday 8th, and want to see what news events could possibly be in to cause some bit of volatility. What major headlines are possibly going to cause some bit of volume or some kind of moves in the market. So I'm using the equity or FXPesa calendar. You can access on your dashboard. So I'll toggle this to medium and let's just clear this to medium and high impact news. Then we tend to see what the market has to offer us today. So it's the economic calendar. I also have a corporate calendar for the guys who are into equity markets and stock markets. You can always toggle that in as well and see what earnings are coming out or dividends are coming out. But as retail FX traders, let's first look at what we have on this side, right? So on the 8th December, we don't really have a lot of news events coming in. As you can see from up there, it's not really a big lineup. Medium impact. Bank of England's Taylor will have a speech at 5:30 p.m. The rest of these are low impact news events. So we have also Bank of England Lombardelli giving us a speech later on in the day. There's really nothing much to watch out for in terms of the news events coming in. When we look at our assets that are today's events, because they are basically speeches from Europe, the Bank of England, of course, we do see the asset to watch would be GBP USD. So we're going to go down and watch it a little bit. When I look at the setup being offered on our signal center here, it's a buy setup. So we shall look at it as well and try to see if we can align the analysis with what the signal center is offering us as well. When I move a bit to trading economics, let's see if we have any. Okay, we have this. This is a major outline you can look out for, or a headline. This and then gold as well. So let's look at this first. We shall have a look at the dollar as well. So for those of you that have been in the market early today, you've definitely seen some moves on gold early morning. Some bullish moves on gold early morning, of course. All this is in regards to the fact that the Fed will come in this week. So the dollar index traded below 99 on Monday after 2 consecutive weeks of declines pressured by expectations that the Federal Reserve will cut interest rates this week. Markets are pricing in about an 88% chance of a 25 basis point cut on Wednesday, right? Up from roughly 6-7% a month ago. I think 2 weeks ago, this is something we woke up with, and we actually broke down here on the same market snapshot. All right. So, however, the rate outlook for 2026 remains uncertain, with analysts expecting a hawkish cut in which Chair Jerome Powell may signal a more cautious path for additional easing. Right? This week's key US data includes the delayed October jobs report on Tuesday, which will provide fresh insights into hiring trends, layoffs, and worker quit rates. Investors are also watching policy decisions from central banks in Australia, Brazil, Canada, and Switzerland, though all are expected to keep rates on hold. All right. Anyway, as I said, I think about 2 weeks ago, whenever we've pricing a possible rate cut, right, the dollar becomes weak, or it's expected to by default become a bit weak. And usually, the only way the Fed can, let's say, uphold strength on the dollar after cutting rates is by through what they call forward guidance, and that's what they call additional easing, right? So while last time when we saw him do the first rate cut of the year, we had about 16 speeches coming in from the different Fed chairs through that week. So you always expect by default that the possibility of a rate cut makes the dollar a bit weak. So you see the DXY tanks not going lower, and of course you will find safe havens like gold going to the upside usually in times like this. So yeah, we said gold prices rose above 42110 per ounce on Monday after a weekly decline as traders awaited the Federal Reserve's final policy meeting of the year, where officials are widely expected to cut rates. Mixed US employment data and core inflation in line with expectations have supported the case for additional easing. Current market pricing implies an 88% probability of a 25 basis point cut. So yeah, basically we expect that. So on Tuesday here tomorrow, of course, we expect the jobs job openings report from October, not November. The final labor market reading before the Fed's announcement will be closely watched. Elsewhere, China's central bank increased its gold reserves for the 13th consecutive month, bringing holdings to roughly 74.12 trillion troy ounces. So basically, they're also trading ahead of the Fed decision to cut rates because it's more than inevitable. We have seen them do this a lot. Every time we had a possibility of a rate cut, we saw the Bank of China doing this every single time. And it's one of the signals that you always start pricing in probably an aggressive gold buy or a long-term gold move. It's something you really need to learn how to denote down once in a while. There are some of those signals you can know when you're going to buy gold for a period of time. And this is one of them. Whenever you see a China central bank buying gold, you look at the policy surrounding it. Is the Fed expected to cut rates? And in case you want to be tracking the possibility of the Fed rate cuts, we always use Fed Watch. It's a website you can always use out for and just see the possibility of the rate of what's expected to come out of the Fed meeting, right? You always just see it from this. So whenever you see it increasing, the demand for gold equally increases. Every time you see this percentage increasing, the demand for gold equally increases. So next FOMC meeting, we have a countdown here. They'll give you a bit of data. It's taking a bit of a while to load up, but you can see in two days, 10 hours, 45 minutes. We shall be diving down into our technical analysis. In the meantime, I would like to send a special shout out to John Saika, Lina Muhonjad, Simon Gitonga, and Odiwa Opar, a terrified rapper as well. Thanks for tuning in as well. Yes, Simon Gitonga, I think, is a usual suspect. A shout out for always being tuned in as well. So this is what the Fed Watch looks like. And then we can see it's 87.2% of a possible rate cut, right? As well. Shout out to you, Charles, as well. Yeah. So in case you have any questions, anything you'd like us to look out into when you go into the deeper analysis, you can always drop it in the comment section. We shall be able to get to it towards the end of our stream. So other than that, there is really not so much you're going to look out for in regards to today's fundamentals. Tomorrow is when things are going to hit up a little bit, of course, coming in with the jolts from October, and then of course, the Fed rate decision. So with that, I think I'm going to dive down onto our technical charts, and we can look at what intraday perspectives, or where the hotspots for today's market are definitely going to be. So I'll just share my screen in a bit. Then we can, okay, gold. Yeah, we're going to look at gold definitely. So now watch list already. So now watch list, we are going to look at gold. So yeah, I have you covered in that. In the meantime, don't forget to sign up for the different FXPesa events for the guys who are in Kampala. And thanks for coming in for our Trade Talk event. It was amazing. For the guys that showed up in as well, there's many more to come. So if you're in Kenya, you have to be on the lookout for the events that will be coming up, especially next year. If you're in Tanzania, the same. You might not want to miss out on those events. We try to share the most we can. Even for the guys that showed up for our last webinar, thanks for turning up for it as well. So just keep on the lookout for when we have these events coming in, and make sure I don't miss any of them, because trust me, they will be very, very impactful to you as well. All right, so our charts are up. Just a second. I'm also trying to reshare with some more communities as well. All right, so as usual, I tend to want to start. So it's the watch list I have. We have German 40, we have US oil, we have Bitcoin, gold, GBP, USD, Euro, NZD, and of course the dollar index that I tend to start with. All right, so it's the dollar index, and we have said that it has been pushing to the downside, basically in the fact that we're expecting a 25 basis rate cut, right? And one thing we also tend to remember is that whenever we have a rate cut, this makes the index a bit unfavorable, right? It weakens the currency by default. By default, it does that. But of course, the dollar has been on a good recovery based on data coming out in the past month before the government shut down. So yeah, I was looking at this rate cut coming in to push the dollar a little bit lower into this last demand level here. It's what I'm aiming for. Then from there, we can possibly start seeing a push back up to the upside. Of course, we expect that the Federal Reserve Government, the Federal Reserve Bank, to do something we call forward guidance, right? So after they put the rate cut, they know it's going to weaken the currency. So they do what they call forward guidance to try and revive the currency, just like they did last time. So so that's something. So that's something we can always look out for, or just understand how the markets tend to price this in. So last time we saw a failure to close above this high. So that means an incomplete break. This becomes a failure swing high. Price tends to go for a deeper retracement, as we have seen it coming all the way into these zones over here. We're seeing a bit of reactions around here because, of course, a breakout area. But now that will depend on how the markets are going to be pricing in the jolts tomorrow before the Fed decision comes in, right? So if the jolts come out positive, we can definitely see a push above this area here, or above this resistance area that price had formed. Then we can see if we can come all the way to the supply level later on. Of course, I'd expect a push down a bit from the Fed, initially towards the Fed rate cut decision. If it happens, you can see some push back down before price eventually goes to the upside. But overall, I would like price to come in fully into this demand level here, and then give me those buying conditions. So it's either price comes into these areas here, or it gives me a break above, but it's in our daily time frame, so this can take a bit of time to actually play out. Going into intraday, let's got some intraday perspectives. What do we see here? So you realize that this level actually has overly been consumed. Nice. When you're refining to the 4-hour, this area has kind of been this area has actually been consumed a lot. The last demand level here was consumed. Some people call it mitigation. When you look at this clearly, price had already consumed it. Let me look for this tool. This had been consumed around here, right? And this is the area that consumed it. So here we're doing a refinement now. That means that price has actually come into the demand level. That is this area here, as you can see. We haven't tapped fully into it, but price is reacting around this zone, which is also a sign of price, where price can actually start buying in from, right? So in case we see we have a resistance around this, there was a nice breakout to this side, then price gave us a nice retest to push us a bit lower. And we're seeing a bit of bulls coming in on this 4-hour candle, or the 4-hour candle that has just opened. Yeah, the current 4-hour candle has happened to flip to the upside. So we're seeing this bullish pressure and it's pushing towards this resistance. When we look right above this resistance here, you're going to notice that there's some bit of imbalance. Now, one of the biggest tricks you want to do when you're trading, right, or trade easily, is to trade into imbalances or what they call free zones. It's one of the easiest ways to trade. You trade into an imbalance or into a free zone. So when I look at this kind of price action here, I'm trying to get an ellipse, okay, there. When I try to look at this price action here, what color should I give this thingy? What color should we give it? Let's go with in a bright color. Let's go with this, and let's make it a bit thick-ish. So nice. So this area here, this imbalance, right? The only way price is going to come and fill in this imbalance, there's even a gap down, is if price breaks above this resistance level we're seeing here. This resistance, what I'll be looking out for is either price comes and breaks above this resistance, then I can look for some buys up all the way to the supply level up here. We have a nice fresh supply level, that is this. We have this fresh supply level that's right over there. So this is the imbalance. I expect in price, if it breaks above the resistance, it could definitely buy back into the supply level, right? Filling up this imbalance. Then to the downside, I won't be looking for any shorting opportunities because price is within higher time frame bullish zones. So in the other perspective, what I can look out for is when price gets into this zone here to complete this demand level, to fully mitigate the demand we have here, is when again I'll look for buying opportunities. But remember, this is a dollar index, so there are guys that trade it, but it's not something that's traded a lot. There are people that trade the dollar index once in a while, but the spreads on it are really, really crazy. And it basically just gives us a big overview on what you can expect coming out of dollar-related pairs. So we can now dive in a bit and look at GBP USD and probably Euro USD. Then we can see what can transpire that side. So this is GBP USD. So we did see a push, breakout, push down, push up, and then we have this whole zone. So I'm going to just clear out this analysis, then we can try to take it again step by step, top down, of course. All right, so this is a daily time frame. And one thing we notice that when the dollar index is being a bit bearish, we expect this to be bullish, right? Right now we have seen price give us an aggressive push from last week. Then we saw some bit of corrections coming down. Price probably failing to close above this high. And similar to what we saw with the dollar index, whenever price tends to fail to close above structural highs, we expect some bit of correction, right? When you look right below this correction, this push to the upside, sorry, we are going to notice that we have this whole zone here, right, which is a bullish zone. And right above this zone, there is a big imbalance. So once again, we are going to use the same analogy. We are going to try either trade into that imbalance, right? See if we can fill up this imbalance that price formed here. You can see this aggressive push to the upside. Price failed close above this high. That tends to signal that price is going for a deeper retracement. This is something you always tend to expect in this case scenario here. Something we didn't expect in this case scenario here as well. So we saw nice rejection week. We have the imbalance here. We had a breakout right around this zone. Then we can now refine our demand zone. Let's have it to this area here, and let's do it to this. It's a demand zone, so we get in this color. So that's the demand zone. We're expecting to push price all the way to probably. So we see where price currently is. Is there any kind of resistance being formed? There is this kind of level that you can see that price came to, retested the first time, tested the second time. I'm going to refine this a bit so I to look at the lower price action. There should be some kind of resistance around this level here. If you are going to refine this a bit, the 30-minute time frame. So it's going to be like our support level that we are seeing right now. Then on a 30-minute time frame, you can be able to elaborate a little bit. So you can see here, price came in from the high, a low, broke above it, came and tried to retest the first time, didn't quite get to it. Came, gave us a retest on this level here. Second retest, third retest. Now it's coming the fourth time, right? It's coming the fourth time. So short term, what are you going to notice within this area here? Would like to look for sells below this area here. But those sells, you'd want to first target this demand level here to be your first demand level to target in simple terms. So you want first look for a push probably below this area, Provided price breaks below this area, we see the bearish momentum coming in. It's quite a good momentum. Price is flipping this candle. It moved up, now price is flipping it aggressively to the downside. So it's something we can expect to see. If price closes below this, we can push it to this area here. If the momentum is still great, then we can look into fill this 4-hour imbalance area as well, right? Change the background color, the lines are not visible. Oh. Let me change the theme on this. Let's see. Template. All right, I'm going to change the template on this. Let's see this as we go to your USD. And I have changed the template on this. Properties. Okay. Colors. Let's see this. Ish. Let's check out on your USD and see. Okay. Oh, so I need to change, save this template and see. All right, now this is on your USD. Let me just change up the template. Okay, so now this is your USD. So now our daily time frame now. So on your USD, we can see a difference in a bit of structures. We had this whole level here. Price gave us a breakout from here. So I'm going to change the colors of all of these. Sorry. This is a trade. So you can see price gave us this breakout at this level here to the downside, and then the high of that area was within this zone here, right? So that's the whole zone price had given us, and then the extreme level was all the way up here. This is the last bullish candle before price goes lower. Price had tried to come and consume it the first time, didn't fully consume it as well. Then it came back the second time, which was last week, back into still the same bullish zone, and then still price started giving us some bears coming in from there, right? So price is still within that same bearish zone at the end of the day. We had this kind of, some people call it buy side liquidity, but price came and swept it. So we expect price start pushing a bit lower for retracement. We saw this beginning a bit strongly bullish today, though it's trying to flip right now as I speak. So let's look at a bit of intraday perspective and see what kind of opportunities we can probably be able to drive up from this. So coming onto the 4-hour time frame, what do we notice? Our price had come from the high around this. Then price gave us a breakout from this area here. Then price came back into this breakout area, coming here and trying to give us another breakout. Was the breakout complete? So we see a candle actually closes below this line after a strong rejection. Then we have seen this retracement back into this zone, and price is pushing lower. So what are you going to look out for? Of course, a break below this low here. This is the last structural low we have. And of course, I shall be looking to push price a bit lower. And what would be our target areas? We are going to have this demand level here as our first target area here. This demand level, you can be able to refine it. That's on the 4-hour. So let's take it to a 30-minute time frame and see if there is a good way of refining at that zone there. So when we come to our 30-minute time frame and try to refine this, when we come into these zones here, we find that there is this area here. that we can be able to refine to. So I'll make my refinement all the way there. And then, of course, look at how big the zone is. It's about 19 pips, which is not so bad. We can always be able to take confirmation within this to reduce the risk, right? It's always easier to take a confirmation. Right now, we are seeing an aggressive push to the downside in a 30-minute time frame, and price is trying to come back all the way to this demand level. So remember, we're only looking for selling opportunities once price closes below this red line. So for as long as price is above this area here, actually comes back into the zone, this is a bullish zone, right? We'll only look for bears when price fully violates this zone. But while price comes back into this zone here, or into this demand level, in case we happen to see kind of like a shift pattern, I don't know, I hope you guys know how a shift pattern looks like. In case you happen to see some kind of shift pattern, we can be able to look for some bit of buys, because this is a demand level and can easily get some nice buying opportunities within this, especially intraday. So if we see this happening on our 5-minute time frame, that's the confirmation time frame for a 30-minute structure. We'll tend to look for some bit of buying opportunities right around this. So that's what a shift pattern looks like, and something I'll be looking out for when price gets into this zone as well. So it's a pattern you shall want to see in a 5-minute time frame. And in case price tends to come aggressive and violate this area, then we shall just look for those sell opportunities to drive us to this demand zone right over there, coming in from the higher time frames, particularly the 4-hour time frame. It's where we have that demand zone coming in from. So it's basically Euro USD, and the structure is also different from what we are seeing on GBP. USD, we have a break probably below this area here and a strong support level here. So either price can confirm from this support level to push to the upside, or it can push to the downside into this area. We get some bit of reaction, then push a bit lower to cover up the imbalance. On Euro USD, let's see if we had the same imbalance on the 4-hour. So we do have the imbalance on this side actually got filled when it comes into to Euro USD. The imbalance already got filled, right? When you see we had the breakout coming in from the 4-hour, then we had this demand level here, and the imbalance starts from here literally. And we had price coming and weakening into that area where the imbalance actually formed was probably available from, right? So we shall focus more on that Euro USD structure and watch how it transpires through that day. Right now, we're seeing, of course, a volume coming, the volatility coming in from the London Open, right? Then when you look at this carefully, we can tend to have something like this. We have that kind of trend line. We have 1 touch, 2 touches, 3 touches. So of course, our break above this will still mean you're looking for buying opportunities on Euro USD. So you want to be very skeptical watching out on those perspectives or those trade ideas we're having coming in from the dollar-related pairs. So you can move on a bit from this and look at gold. Can look at gold. Let me change the template. All right, so gold began very bullish today. Had some nice buys coming in on gold from a nice demand level. Look at the daily time frame. We had, of course, price failing to close above that high, right? And what happened? Price gave us that attempt to go into those retracements, of which we saw the first retracement respecting the demand level available, which was this, a type 2 demand zone. And then price has pretty much been in this consolidation on the daily time frame ever since then. We had some bit of news events coming out late last week about Thursday there, if I remember, there were employment-related data events that caused a bit of indecision within gold. So you can see that Friday candle was bullish and then it flipped bearish at the end of the day. So what can you expect? There probably a push down before price pushes higher, but it will be on call. So let's look at the zones where you can look, or the structure that can look to try and fulfill that objective. So right now, price has been in a range. This is for a ranging area that we have been seeing price be in between for quite a time. Looking below this area, we have no area that's available. All the areas have been consumed. So I'm going to go down to the extreme zone, and so on I'll have a left, which is this right over here, to be my decision area, or the zone through which I'll look for confirmations to buy or reasons actually buy in case price gets to them. When you look at the same current price action, we notice that there is some kind of like trend line that's acting like a support right over here, and this offering us basically I think it's called a wedge pattern or a pennant. I believe it's called one of the two. I'm not sure which one exactly, right? So this is what we have over here, right, on a 4-hour time frame. So basically, if price closes below this, I'll like get a support level that's aligning or nearest to this same trend line around the breakout zone and these areas here. So you see that once price breaks below these two here and look for a retrace back on this resistance level, that's when I can push price to the downside. If price fails close below the two of them, I'll focus more on bulls, right? I'll focus more on being bullish, and then coming in with my bullish confluences, I could have this as well. You see that? We could have that happening as well. But of course, when I have this happening, I'm going to look for a resistance or a supply level to supplement with my trend line. I don't really have the knowledge of trend lines working on their own. I always believe there should be something to support a trend line whenever it's being formed in a zone. So you can see that resistance level there, right? You can see how effective the resistance has been. From this side, our price goes in, goes out, goes in, goes out, goes lower, retests, comes back and rejects the area with this most recent candle. So we have this right over here, and we have that standing resistance above, right? So here I would like to have breakout of this area and a breakout of the resistance, which is that blue line. Then I can start factoring in more bullish bias or more bulls coming into this pair of gold. Going down to a 30-minute time frame. So pretty much that the structures being formed here are actually showing a bit of strong bearish momentum. However, when I look at this area here, there's another resistance that price formed here, right? So what do we want to look out for? Short-term perspective, it's a 30-minute time frame. We would like to see a breakout of this resistance. Then we can now have some nice opportunities on the 5-minute to buy gold all the way at least to this area here. But I think I'm going to notice we have a nice big imbalance here. Remember, we trade into imbalances or out of imbalances. Price you're trying to fill up the inefficiencies in the market. So it's something we like trading into free zones and then imbalances. It's always nice to actually be able to trade into those zones because price tends to fill them rapidly. So this is as far as gold is concerned. And so that's what I'll be looking at in terms of the gold markets this week. So let's move in a bit of indices or indexes. I wonder which one is the right one. Indices or indexes. And of course, the UT 100 or the NAS 100 will be my first. So let's get UT 100. Okay, it is. And by the way, guys, I would like to remind you guys that don't forget to check out the latest Bullish Banter episode that just came out. It's an interesting one. So you might want to look in and listen to it and tell us what you think about the episode, what you learned from the episode. And of course, the Bullish Banter has a Telegram group where you can actually share your feedback and actually even suggest who you'd like to see next being hosted on that Bullish Banter podcast. So yeah, in case you want to be part of the community with the Bullish Banter, you can always check under those episodes. You'll find there a link to a Telegram channel, right? So you can, don't forget, immediately you're done from here, you just go check out that episode and you can be part of the Bullish Banter community and share setups still there. You can share ideas, discuss with different traders, and see how you can be mutually beneficial to each other, as well as we do the same for you guys as well. So looking at NAS 100, for the guys that were here, I think last Monday about 1, I did mention that, of course, the rate cut is also going to favor a lot of the equity markets. And many of us as retail traders, we don't directly trade equities, we're not directly trading stocks, you're not directly buying dividends and things like that. But then when the rate cut favors the equity markets, the best way for us to track them or to be able to benefit from them is exactly through what you call the indexes, right? Or the indices. And these are the indices, right? We're talking about, they'll reflect what's happening in the equity markets, right? Of course, some people are very critical, go down and you'll know what index has what major companies, for example, the US 30. Then they'll wait for a time when all those major 30 companies are either tanking or rallying. Then they come and buy the US 30. But then technically, you can always be able to get nice opportunities from these pairs here. I classify them as highly volatile pairs. I put them in the same category with gold. So if you're like totally a beginner, you're still building your psychology, it's a nice pair to analyze, but you don't want to how do I call it? Don't want to waste a lot of time with it, because the day when you lose, you'll lose badly. It's so volatile, right? It's so volatile. The volatility on this is a bit hard to navigate, but also beneficial because the volatility creates more market opportunities. And with our rate decision coming up, we largely this is going to be bullish because it's going to reflect what the equity markets are looking like, and they have been very, very positive. So you want to be looking for those buying opportunities. Now, for the guys who are here that Monday, there we had a target that was this area here. That was last Monday, but one. So the target area, because price was just somewhere below here. We're looking for a breakout of this area, nice retest, and a push up. And as you can see, exactly what price gave us. So going on to lower time frames, I'm going to focus more on lower time frame structures that give me bullish opportunities. Now, I'm going to look for these lower time frame structures, but I know in mind that the possibility of a Fed cut keeps increasing. That means NAS 100 will want to keep being bullish, or to be a beneficiary. Hence, the bullish market movements, right? So what I think I'm going to notice within this, whenever price tends to retrace on this pair, on this is the 4-hour time frame, it tends to retrace into former breakout zones, right? Into former breakout zones. I think you can see that. Retrace into breakout zones. So this is just our market structure that we are going to be looking at, largely in terms of NAS 100. So here you can see that price is coming towards this supply level that was our target. And of course, we had this bullish candle coming in and then give us a rejection. Then we are seeing lots of momentum. Usually with lots of momentum, expect price to go a bit lower, or to start factoring in for a kind of like a correction move, right? So when I come to a 30-minute time frame, I want to see what is actually happening with our most recent price action and why price would want to go lower. What areas are there for price to actually go to? When I look at the current sell-off that we are seeing, this past 3 candles, about 1.5 hours ago, I realized that there's a demand level right below it, right? I don't know if you're able to see that demand level, that breakout, that bullish breakout zone. This is a bullish breakout zone, right? So this bullish breakout zone acts as our drawn liquidity, or a magnet, a price magnet. Price is trying to get to this zone, right? One thing you're going to notice is this. These are all bullish candles, and based on how they are forming, they are showing you losing momentum, right? They are buyers, yes, who are dominant, but then they are fading out. They are fading out. Their buying capacity is fading out. So what happens? Sellers start trying to take control, and now they are pushing us lower, right? The structure is still bullish, but they're pushing us lower towards our drawn liquidity, which is going to be this demand level here as well. So we can easily expect our price to push lower. Of course, close below this low, it's the last structure low, and then give us probably a slight push back up. Then I will start going all the way to the downside in that regards. On the other case scenario, in case you're looking to buy through the day, especially in the NYSE session, you'd want to focus on price taking out these highs, and then of course giving us those buys to this supply level that came in from that daily time frame. That's what you want to look out for in terms of NAS 100 and what structures it's giving us. So sometimes I like correlating this as well with the S&P 500 and then US 30. All right, so let's have this template change up from there. We come from the daily once again. So of course, the S&P 500 has also been very, very bullish, as you can see, pushing to the upside. We had a strong rejection week here as well. But let's go at the 4-hour time frame and try to investigate what is most definitely transpiring on US 500. So we can look at this price action similar to what Nasdaq has. Price is pushing up, but it's getting a bit of resistance. So we have this high still intact. So definitely what would be our target within this area would be take out these highs. Oh. So the goal on US 500 would be take out those highs, while on Nasdaq it's to reach to that supply level above, right? So you find that they both have bullish draws on liquidity. So you can now go down to this is a 4-hour time frame, right? You can go down to a 30-minute time frame Then we can look at the price action being formed around this, right? So look at this carefully. Very, very similar structure to NAS 100. We have the most recent demand zone. Price breaks out from this and then leaves as a whole a demand level right below it. So you can expect price to come into this zone here and probably start looking in for those 5 minute bullish confirmations, right? Try to factor them from around that zone in case prices to give us some kind of, let's say, bearish momentum. Can just have to confluence like this. We need price to break, of course, below the trend line and also break below the demand level on the left hand side. Then we can now factor in a bit of bearish momentum or some selling opportunities in regards to US 30. So you can be dropping your questions, and in the last probably 15-14 minutes, keep going through them and a bit of your pairs. So this is what we'll look out for on US 100. And let me see. So this is US 30. So it's also been bullish. It's also been bullish for a bit. We have seen a bit of rejections coming in the last days of price action last week. And then we see that once again, our price has filled up the imbalance within US 30. So it's probably why we can expect to get some bit of bearishness coming in from this pair here. But you tend to know that its structure tends to be slightly a bit different from the previous ones, right? Tends to be slightly a bit different from US 100 and S&P 500. But let's look at what price would have to do in order for this pair to have a definite direction. So I'm going to take this area here almost as a resistance level. So I don't know if you can see the reactions that price gives around that area there. Price came lower, shifted, then came in to fill the whole of this imbalance here as well. Then as well, you can see there's a high formed right here. So if I'm looking for buying opportunities, I want price to come and take out this zone here. If I'm looking for buying opportunities above that area there, the other area I'm going to look for buying opportunities is going to be this last demand level here. So this demand level will be the last buying area. The last zone I'll look for bulls, in case price gets to it as well. Then I'll start factoring in a bit of bullish trader ideas. On the other hand, we can just be able to confluence this. So let's have it at this point. So here we shall need, of course, a breakout below this. That's can easily happen. Then a breakout below this demand level will also be very, very important to actually pick up a direction as far as US 30 is concerned. So as I was saying, you can drop in what pairs you'd like us to watch out for and what questions you have. Then we can look at them before we actually call it a day and see what the market offers for us. Does the red cut push our minds to a buy setup on gold? Yes. On gold, US 30, NASDAQ. Yeah, push it to a buy mindset. That's what it means. So I'll shout out Offset as well for always tuning in. So another buying zone we can have, because we're going intraday, is still this area here. It's an area I'm watching off. Boom and crash. And we don't offer boom and crash. Those are synthetics. We don't offer boom and crash. Chabay FX. We don't offer boom and crash. Sorry for that. We don't have the instrument. Yeah. How do you draw demand supply zones? So I have two ways I do it. For example, because I'm doing top-down analysis, right? top-down analysis. So the first time frame that I tend to call the constant time frame always. On my constant time frame, just write it here, which will always be my first time frame. Usually, if I'm going intraday, it's always going to be either the daily or the 4 hour. I'm going to focus more on the breakout, right? The whole breakout area. That's what I call a demand zone. Personally, the whole breakout area is a demand zone. In my case scenario, on my first time frame. So this could be my 4 hour. Then what most people call demand levels or order blocks. It's what I now call the demand level. So I'm going to make sure that I'm looking for those demand levels inside this zone here. So this is how I would identify my demand or a supply zone, and it will be on usually my first time frame doing top-down analysis. So if this is my 4 hour time frame, then on a 30-minute time frame is where I'm going to look for. It's where I'm going to look for those demand levels that look like this. To always be the last push. Let's say the last. If you're going up, the last bearish candle before a push to the upside. So let's something like like this now. This now will be a demand level, right? But I want to make sure this demand level, because it's a 4 hour, then I'll need it to be in a weekly time frame. So that's how I tend to draw them. Let me get an example from a 4 hour time frame, I think. If I have a 4 hour time frame like this, I need a breakout. I need a breakout around this. So let's take, for example, price gave me a breakout like this. This is a breakout, yeah? So this breakout, you have demand levels automatically there, which is okay. So I'd have this demand level that leads to the breakout. But usually if I have a clean breakout, then I'll refine to a 30-minute time frame. That's the zone in blue. That's the zone. Then now when I come to this, where I'll look for the actual demand levels. When I come to this, I'll look for actual demand levels. So you could see that first gave us a buy up. This now would be the demand level. So that's how I identify my demand and supply zones and how I differentiate them with demand levels. So you can have that as a demand. So that demand level. So that's how I draw them. I'll have a zone, that's a breakout zone on a high time frame, then the levels on lower time frames. Do demand and so that's for Lina Muhonja. That's how I classify them. Particularly, I think I'll take one more question from Offset. Another question: do demand and supply necessarily have FVJs? So it depends on how you want to trade them, right? But here's what I do. I usually have like qualifiers for my demand and supply levels. So I may not have sometimes a fair value gap, but I have other qualifiers for it, right? So it's not necessarily a must for my demand levels to always have an FVJ, because I have a variety of conditions I'll look for. And it's not a must for price to have all those conditions. You just usually need to have like one or two conditions for it to be valid. So it's not a must for it. But if you're comfortable having only the ones with the FVJ, it's also okay. I mean, we talk about discipline as traders. That's how you build discipline, right? If you're someone you're trading the demand and supply levels with FVJs or imbalances, you stick to those. So personally, it's not a must for them to have FVJs, but I would prefer the ones that have. Yeah. So basically, that's the last question I'll be looking out for today. Thanks for tuning in, guys. I hope you guys have an amazing week, a peaceful day ahead as well. And yeah, keep watch of what's pushing the market. Don't forget to sign up for our daily classes or our daily workshops. We have the 11 AM online class, the advanced class. If you feel like you need something you want to push into, or you know a couple of people who are interested or need those classes, kindly don't feel free to refer them. The links are in the description. You can share it with them. They can sign up. If you know someone want to start forex trading and they don't know where to start from, we have an 8 p.m. class specialized for those kinds of people. And still on the same link, you're able to get it and share it with them as well. Then, of course, here at our Academy in Uganda, we do offer physical classes. So, of course, if you're around Kampala, you can always swing by from 3 p.m. If you're in Tanzania, we do have the physical classes as well ongoing at Dar es Salaam FNB House, third floor. So other than that, I'd like to wish you guys all the best. Cheers and thanks. And yeah, we'll meet again.